All right. Well, hello, everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen, the 31st of October, 2025. So, look, this is the last trading day of the week, of the month. So, let's see what's happening. But let's see what's happening in the crypto world, because this is a quick little update on the cryptos. I haven't done any cryptos this week, so you know what? I thought I'm going to just check up on those, because again, the whole spotlight kind of was on central banks this week, on some economic data, some geopolitics. So I think that cryptos kind of got pushed to the side. So let's see what's happening there from the technical perspective. But before we jump into that, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, like I said, there are some nice fluctuations in the crypto world, in my opinion. Also, by the way, also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So now then, let's have a look. Bitcoin, BTC USD. So we saw a bit of a decline this week, and after the Federal Reserve interest rate decision on Wednesday, we saw an even bigger decline. So it kind of drifted all the way down here towards the 106,000 and a half zone. So I talked about this previously in one of my Markets Talk webinars. But basically, the slide happened due to the strengthening of the US dollar. Because we know that after the Federal Reserve interest rate decision came out, and then we had the press conference. And this is, I keep on saying, always watch the press conference, because that's when the big action happens. And during the press conference, the Federal Jerome Powell kind of downplayed the idea of having the rate cut in December. So in a way, what he was saying, that they're not sure if the rate cut actually will happen. So you can see now in the Fed Watch tool that the December projections are kind of a little bit on the lower side. Before, it was closer to 90% of having another 25 basis point cut in December, but now it's kind of drifted lower. My idea, my forecast is that we will see a further decline going into the beginning of November, just because kind of, like I said, we're allowing the US dollar to strengthen a little bit more, given that it's the holiday season, and it's the US consumer needs to feel that the US dollar is kind of worth something, because there's going to be a lot of traveling abroad, especially, and also inside the country. You need to kind of understand that your bucks can go a little bit further. So in a way, in order to please the consumer, I think that the US dollar will remain a little bit on the stronger side. But again, this is a short-term view, because I think that you can see right now here, this is DXY, the dollar index, where this morning I was talking about this, and said that keep your eyes on this 99.56 territory. It's a good barrier of resistance, but if that gets broken, this could lead to some higher levels. So I'm leaning still towards that 100 area, and I think that this is still a good sign, that a good target. So and even a little bit above that. So like I said, although the US administration does need a weaker dollar for now, because again, it's easier to do trade, because US goods become more attractive on the global arena, and is becoming more expensive to import from abroad. So that's why you need to keep the US dollar on the weaker side. However, as I said, going into the holiday season, we can allow the US dollar to strengthen just a little bit, and that's why I believe that all other instruments, all different securities which are denominated in the US dollar, they could go a little bit lower, and we can see this clearly on in the crypto world as well. So Bitcoin drifted lower. Look, purely from the technical perspective, I have this Fibonacci drawn from the lowest point of April to the current all-time high, and we have this. We have tested, this. We did break through the 23.6. We went lower, tested the 38.2. We even drifted further south, and we kind of found support somewhere in between the 38.2 and the 50% retracement on the Fibonacci. We didn't rebound it and push back up, so yeah. Look, it's a bit of a sideways action right now here, as you can see. So what I was saying this morning, that I would actually prefer to wait for maybe a drop below the 38.2% on the Fibonacci retracement again, and drop below the crossroads of these two trend lines. And if that happens, then we could see further declines. We could travel towards that 103,000 zone, or even below that. If we do fall below the 103,000 zone, yep, I'm getting a little bit more bearish. And I'm aiming for that psychological 100,000 zone, which is not far from my 50% on this Fibonacci retracement. But again, we'll go towards that slowly. We're not going to rush into conclusions, because at the moment I think that just the crypto is kind of ranging, waiting for the next big thing to drive it lower. Maybe a strong move in the US dollar could help the bears here. Bitcoin Cash. Now, Bitcoin Cash is an interesting one. It kind of looks a little bit more bullish because it's forming something of a bullish flag here. But let's face it, I mean, this downside line, although it's a little bit on the tentative side, still is providing resistance. We keep on piercing through it. We keep on forming these false breakouts. This 23.6 on the Fibonacci retracement, also measured from the same, drawn from the same levels, from the same points, basically the lowest point of April to the current highest point of this year. Not the all-time high, no. Let me just the all-time high is still, further down the line here. The all-time high was back in, let me just go into monthly. There we go. Look at this all-time high. That was back in 2017. Yeah, that was December 2017. Wow, like 4,300. Imagine this on Bitcoin Cash. If you kind of think about the fact that maybe it's going to travel back up towards this area, then it's relatively cheap at these levels. But I think that maybe, with the strengthening of the US dollar, we could see a little bit of a decline here back down. So let's see what's going to happen here. Ripple. Ripple also at a very interesting spot. It's kind of oscillating around that 20-day SMA within the Bollinger Bands here. And I don't really like that. So I would rather wait for a push at least above the 2.69 territory here in order to consider some higher levels for the downside. A drop below the 2.37 I think would be ideal, and if we can get that move, then yes, great. I will consider some lower areas. Ethereum, very quickly, this one continues to hold above this territory here, which is it's not really a specific level. It's the 3,650 77-ish zone, so we continue to trade above that area. And if we do drop below that, then okay, great, more sellers could join in. We could go maybe for that this little hurdle here. This is the lowest point of October. That's the big tweet we had from Mr. President about China, and how he's going to place tariffs on them and blah blah blah. So yeah, it's an interesting one. So yeah, we'll see how that plays out, of course. But at the moment, I think that what could happen here is we could start moving sideways a little bit, and we are doing that already. So that's why I need a clearance through this. Through the sides of this kind of little box that we're trading in. Litecoin. Now, Litecoin, I really like this one. It's certainly sitting in a little bit of a range here as well. We're roughly between the 90.30 and the 100.50. If we clear one of the sides and we see the body of the daily candle remaining outside of that range somewhere, it doesn't matter up or down, yes, I'm going to consider the next short-term directional move in the direction of the breakout. Dogecoin, also near key support, near the 0.1785. If we can clear this, great, more sellers here could join in. Polkadot. Polkadot is also in an interesting spot, and if we can drop below this, or actually, if we can stay below this, we already dropped, but if we can stay below the 2.89 zone somewhere here, I think that yeah, we could see a little bit of a bit more low, a few lower levels getting reached. I do like the idea of traveling all the way back to 2. But again, if we look at the historic picture here, so basically this is the lowest point here, 1.44. Well, it was the lowest point until we got that drop in October after the tweet, the post on Truth Social. And this dropped all the way to 1.17. So that was the big lowest number that Polkadot ever experienced here historically. So, but then we beautifully recovered here. Look, long story short, for now, I would say this way that I am leaning a little bit more towards the downside, but not much. I'm going to be very careful. 2.5 zone, I really like that one. Just purely out of symbolism, to be honest. Nothing major. I don't really have a strong area here anywhere, but purely out of symbolism, 2.5 could be an interesting target. And finally, Tron. Look, I like Tron. I really do. It's one of those cryptos that actually behaves like a currency pair. For now, what we're seeing here is a beautiful decline and now a gradual decline. And if you have followed my videos before and you watched my kind of analysis, then you'll know that this is one of these positive price structures that I do like. Whenever we have a strong decline and then a gradual decline, it tends to break out to the upside. So basically, we're now forming something of a falling channel. We could still remain inside the falling channel. That's absolutely fine. But let's face it. It's it could eventually break. It could eventually break. Of course, don't get me wrong. It could break to the downside here. I'm not excluding that scenario, but the higher probability still is to the upside. But again, as long as we remain inside this falling channel pattern, we could still drift lower. Once we start violating the upper side of this falling channel, that's when I'll get a little bit more excited with slightly higher levels. I'm not saying, major upside here, but no, slightly higher levels. And then we'll take it from there. We'll go gradually. Ladies and gentlemen, this was a quick little crypto update, a quick little technical crypto update, just to see how this month has ended. And just to kind of finish off, let's quickly go backwards here. So this is the candle here, the monthly candle on Tron against the US dollar. So Polkadot, similar story. Tron has been one of the biggest losers in my opinion. But it's, again, I do still like that one, minus 11% here. Dogecoin here, minus 20%. This is interesting. This is like the illusion of the candles, right? So it looks like quite big, but actually percentage-wise, it's still lower than, for example, than Dogecoin. And imagine this, Dogecoin at one point had a bigger decline. So yeah, it's settling at around, for now, minus 20%. Litecoin for the month minus 10 so far. Ethereum minus 7% roughly. Ripple minus 12%. Bitcoin Cash minus 1%, still holding on nicely, and Bitcoin minus 3%. So Bitcoin Cash is kind of the one that's kind of holding off the best. Ladies and gentlemen, I hope you found it useful. Thank you very much for watching and listening. I'll have to wrap it up here. Let me know in the comments what you think. Do you agree or not? Or what can you add something else maybe to this? But I would really love to know your opinions on, do you believe that from here we could actually rebound and push back up, or actually we're gonna, continue the slide? So let me know in the comments. Thank you very much for watching, listening. Don't forget to like and subscribe. And as always, don't forget to have your stop losses in place. Risk only what you can afford to lose. Don't overtrade and everything will be fine. I'll see you next time. Bye-bye.